Welcome to today's Alphaway Finance. It's July 6, 2025, and the markets are buzzing with fresh developments. From tariff deadline chill to Bitcoin momentum and Treasury market shifts, we're seeing real-time reactions. Even on a holiday-shortened week, global investors showed an astonishing calm as they head into major decisions. Stick around so you can stay ahead when the fireworks end. Investors are heading into Trump's July 9th tariff deadline with a strange sense of calm. Despite historic threats up to 70%, markets are pricing in manageable outcomes. This newfound blasé attitude comes after a dramatic 14% drop and a 24% rally in world stocks. The S&P and Nasdaq are at record highs, and investors are saying, "We've been here before, we'll survive again." That resilience is key. Today it means calm. Tomorrow could be action. U.S. equities remain robust despite looming risks. The S&P 500 and Nasdaq just notched record closes again, powered by strong earnings and the new tax and spending bill. That package makes Trump-era tax cuts permanent, but adds $3 trillion to the debt. Rally or bubble? That's the million-dollar question. Markets are firing now, but volatility could follow. Treasury yields are swinging. With the debt package and tariff worries, bond yields rose, reversing gains from earlier in the year. Treasury Secretary Bessent aims to cut long-term issuance, leaning on T-bills instead, a move that could expose the government more to interest swings. Markets are fickle. Yields up mean bond prices down, and opportunities for yield hunters too. The US dollar continues to slide, losing about 11% year to date. That weakness pressures imports and consumer prices, but boosts exporters and commodity assets. The dollar's poor performance is the worst since 1973. Big picture, global trust is shifting, and every portfolio should factor that in. Bitcoin just rallied, reaching a year-to-date record nearing 112K. Supported by institutional tankers like Treasury-using companies and Trump's strategic Bitcoin reserve. Now, altcoins lag, but Bitcoin alone is pulling ahead. Its increasing mainstream role can't be ignored. Institutional Bitcoin adoption is accelerating. About 135 public companies hold BTC now, including MicroStrategy's continuation of reserves. Spot ETFs are growing, and some analysts predict mainstream corporate adoption soon. With the Genius Act passed and Treasury backing, that narrative just got stronger. Crypto remains tied to macro. BTC and ETH vols are cooling despite rallies, suggesting smart money is steadying positions. The big whale moves and back-end stability show a market maturing. For investors, the signal is simple. Crypto is evolving from risky asset to strategic reserve. Meanwhile, gold is quietly outperforming. Spot gold is up about 26% year-to-date, even outpacing Bitcoin's advance. In a world filled with tariffs, debt, and central bank uncertainty, investors see gold as a steady answer. Allocation-wise, it's the ballast you may not have expected but should seriously consider. Oil and copper are taking a slight hit ahead of OPEC Plus's August output decision. Commodities trading lower reflects global growth caution and supply policy uncertainty. Yet these dips often bounce. If the Fed leans dovish and trade deals emerge, the recovery could be surprising. Treasury futures are jittery around looming decisions. Market participants are watching Bessent's issuance strategy, Fed policy, and tariffs. So far, traders expect only 2 Fed cuts this year, down from early optimism. Bond market volatility is a reflection of fiscal and monetary crossroads. Prepare for twists. In broader macro news, the One Big Beautiful Bill passed, addressable via U.S.-Vietnam trade agreement, removing tariffs for American exports. That gives exporters a boost, but adds pressure through new U.S. debt. Trade moves plus fiscal stimulus, investment engines at war with deficit concerns. Tesla's stock was hit this week, falling on news of lost EV tax credits and Musk's feud with Trump. Now, fresh buy zones are emerging around Uber, Shopify, Nextracker. These names are quietly gaining institutional attention, while Tesla rebounds, showing market love evolves fast. Asian and European markets diverged from the U.S. rally. Despite U.S. record highs, Asia slipped and Europe was mixed. Tariff uncertainty and shifting capital flows are at play. Your takeaway? Don't follow U.S. blindly. Global opportunity demands awareness. DeFi is showing signs of maturity. Total value locked is up, but daily activity is flat. Large wallets seem to be populating quietly, not panicking. The market is consolidating, and that could pave the way for a strong Q3 rally. Regulatory focus on crypto is increasing. Congress is holding Crypto Week, with discussion on exchange rules, stablecoin oversight, and national digital asset frameworks. Combined with Trump's executive orders, this could bring clarity or chaos. Stablecoin legislation could reshape Treasury demand. If lawmakers require stablecoins to back with short-term T-bills and disclosures, issuers may buy more treasuries, supporting yields but also linking crypto to sovereign bonds tightly. Corporate credit data is bullish. Consumer spending held up in Q2 even as inflation remains sticky. That's a signal. Parts of the economy are resilient. Those pockets of strength could drive stock or bond plays. Not everything is recession. Real estate remains strong. Suburban regions and Sun Belt are thriving. Institutional investment in housing continues, supported by stable flows and demand.
Coming up next, watch the July 9th tariff deadline, best since issuance plan, Fed commentary, OPEC's output decision, and CPI PPI data. These are the game changers. Stay alert, diversify across markets and asset classes, and don't believe hype. Act with conviction.